BNP Paribas explains how to benefit from China's growth story. Meet Thomas, a product manager of a large global asset management firm. He has long been observing China's rapid growth and believes he should take advantage of this huge opportunity to directly invest in the country. This would allow him to manage his cost and control his funds more effectively. Yet he knows that directly investing in China is difficult because of the tight restrictions on currency flows in and out of the country. China's currency, the renminbi or RMB, was not allowed to leave the country for a long time. In fact, only in 2009 did it start to get some exposure in the international markets. Nevertheless, the return of Hong Kong to the mainland and China's membership of the WTO triggered a gradual easing of the currency regulations. The RMB now seems to be on its way to liberalisation. Thomas wants to know how to best allocate his funds in China. His friend Karen, a fellow asset manager, explains that the main doorway into China is the QFII scheme. This allows foreign investors like Thomas to invest directly in China's local assets, such as A-shares and bonds, which are RMB denominated. Still, he would be required to use US dollars to invest into China before he can convert them. Thomas also needs to apply for a quota with a detailed investment plan on fund flows in and out of China, making this solution more suitable for longer-term investments. Thomas wonders if there's another way. Karen recommends the RQFII license, which acts as a second doorway into China. This newer scheme allows financial institutions based in places including Hong Kong, Singapore and London to set up locally regulated funds to invest in China directly in RMB. The funds also offer daily liquidity for subscriptions and redemptions. Thomas believes this is a simpler way to channel his offshore RMB funds into the mainland for short to medium-term investments and thinks about opening an office in Hong Kong. Furthermore, Karen advises Thomas to consider benefiting from the outflow trades from China. The QD scheme acts as a doorway for companies domiciled in China to invest anywhere around the world, and would allow Thomas to sell his funds to investors from China. Thomas asks Karen if she had any help along the way. She recommends BNP Paribas, which gives investors access to all three doorways, effectively bridging East and West. BNP Paribas have been present in China for over 150 years. Their international expertise, coupled with BNP Paribas Hong Kong, can help minimize the risk and complexity of investing in and out of China, saving both time and money for their clients and giving them better control over their funds. Besides acting as a global custodian, BNP Paribas' open architecture also allows Thomas and Karen the flexibility to choose their preferred local custodian. Thomas is convinced that it is high time to capitalize on this key opportunity, and with BNP Paribas' experience in connecting investors in China and the world, he feels he is in very good hands. Access all doorways to RMB cross-border flows. Contact BNP Paribas for an update now.